Hello everyone, I'm Mark Sane and welcome to Sane Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 19 of the Forex market review. Today we're going to take a look at three currency pairs, the pairs that I traded last week, and they all delivered with some great results. So let's go have a look at those three pairs, the reasons why I got in and the reasons why I got out. So here we are starting to look at the Aussie USD. So up on the right hand side here, you can see we're on the Aussie USD chart, starting with the daily time frame. And first thing I look for is this first largest AO peak, and that identifies the wave 3 motion. What I then want to do is roughly at the beginning of the wave cycle, I grab my Fibonacci tool and I drag it all the way up to the end of the wave cycle. Now we don't know this end has occurred until this AO is returned back below the zero line. So around about that point there, it returned to zero line. We move up, we look left, and in this case we find the highest point because we're in an uptrend, and then we would put the marker there. Obviously, as it's moving up, we would just keep moving our Fibonacci tool until it came back to the zero line. Now we know that wave 4 pullback will come back to about the 50% mark, between 38.2 and roughly 61.8%. So I like to get it around the 50% mark. I would look left and I would see some resistance areas. So what I would do is go ahead and click in these areas and just drop in horizontal resistance zones. And what I've got here is a dynamic support and resistance indicator, so that automatically picks them for me, and that's available to purchase if you don't have it. But you just look left, just see where it's bounced a few times, and that gives you a good inkling of roughly where the market could turn. So if I miss this move up and I'm looking for a pushback lower, I'd be looking at buying around these levels to push back higher. But the trade I took was a move lower, and so what I was looking for is I would put in my indicator when it roughly reach its peak. I would then drop down to a lower time frame and I would start looking for divergence. So a divergence is higher high in price, which we have, followed via a lower AO. So we can take it from this point here or this point there. We just want to see them stepping down, and there's multiple points where it's stepping down, and that's just giving us a clue that it's very likely running out of steam on the way up. But before we will look at buying that, we wanted to see it break some resistance areas, and what previously was resistance becomes support. So it tried to break through, came back, tried to bounce, finally broke through. We want to see it come down, break through that resistance area, which it did, and then go back and retest it and enter the trade. So you would have been looking at entering the market around about these levels here, putting your stop loss above the highs, so probably around 180 pips, and you would be getting out roughly around the wave 4 pullback on the daily chart between the 50% and the 61.8. And because I'm risking 180, to make 360 would have been ideal, and down there is where I would have liked to take the exit. So that's the reason why I decided to take this trade short. On the daily chart, we're looking at going lower for wave 4. So we had our break down, our pushback higher, retest these resistance areas, enter the market, looking for a pushback lower, and now we want to look for a wave cycle back lower. We then drop down to the 1 hour chart and we're just watching the market pull down. And as it pulls down, it starts doing the large AO, which is wave 3, back for 4, down for 5. We start looking for divergence, which is a higher high in price with a lower AO. Or in this case, we got a lower lower in price with a higher AO because we're now in a downtrending market. So as it steps lower and makes lower lows, but the AO comes back up and makes higher AO. What's that saying? It's running out of steam on the downside. So if I'm in short in this position, I should seriously be looking to get out. So round about this area here was where I was looking to get out. I would have then jumped down to the 15-minute chart, which I did, and I'd be looking for divergence on the even lower time frame, and I had it from here down to here, and so it's a lower low-end price with the AO being higher, so that's very clear to see. And then everything just sort of paralleled up with the divergence on the 1 hour, divergence on the 15-minute, hitting the 61.8 Fibonacci level, and this horizontal daily level, which we identified here. So when it hit there were multiple indicators telling me to get out, and that's where I got out. And then bang, up it goes, and that's fine. But if you're looking for a long trade, now you're looking for that breakout, retest, and then push back higher if you're looking at now going back long. So that was the Aussie USD. The pound CAD was a similar trade. We have wave 1, up for 2, down for wave 3. First largest AO, as we can see there, until it comes back to zero line. We don't know it's the end. We then follow our way up, look left, and find the lowest point. The lowest point, because it's in a downtrending market. Again, grab your Fibonacci tool, and you'll be looking for a pushback up until roughly the 38.2, the first place, but about the 50% where I like to get in for my risk to reward. So it's moving back up, and now I want to take an opportunity of going long for this pushback higher. But before I do that, I need to see divergence occurring on the way down. Again, I do. There's your divergence with your lower low-end price. So the price is stepping down, but the AO is stepping up, advising me that it's very likely running out of steam. So what I want to do is have that breakout higher. And when you see the breakout higher and then the retest, that's when you want to look at getting long. So here it had its breakout, it's come back, it's found its support again, and then you're looking for a move back higher. We'll just zoom out a chart. So if you saw that, came back, double tapped the bottom, pushed back through there, you could either take the breakout of those levels there, putting your stop loss roughly down there for about 300 pips, and exiting around up here for about 600 pips. But I always like to see it break out, come back, retest the support area, and you can see it's bounced a few times there. I'll just go ahead and drop in a line. And with this DSR indicator, if you go and modify that, so you just go and do a right click, it's currently set for the daily time frame. If I go and adjust that for a 60-minute chart or a 1 hour time frame, what's that going to do is now drop in these indicators, and as you can see, roughly around these levels, it's bounced a few times. So pulling back in, purchasing it around there, putting your stop loss around 200 pips and going for 400 pips. That's a very good risk to reward, risking $100 to make $200. That's the trade that I took, and I exit the trade. The reason why I exit the trade, obviously you want to look at your higher time frames. Ignore this is because that's now the DSR indicator on the hourly chart. And we'll just go ahead and change that back just so we can see what's going on. 1440 minutes is equivalent to a 24-hour period. That's why I'm putting in 1440. So there's the first resistance area. Looking up here, I can see that resistance area, so I want to consider getting out there if I can make big enough risk to reward. So I'm risking 1 to make double. I then drop down to my lower time frames, and as it moves up, what are we looking for? Correct. AO divergence. So in this case, we're in the uptrend, so we want to see a higher price, the price stepping up, but the AO stepping down, and that gives us a good indicator that it's running out of steam. So having that horizontal resistance level on the daily chart, no Fibonacci level this time because it's a lot higher, but we still have that horizontal resistance. Using the dynamic support and resistance indicator, we're seeing 1 hour divergence. I then drop down to a 15-minute chart, and I want to see further divergence happening. And as you can see, higher in price with a lower AO, and that gives me an example of getting out. So roughly around these levels, I would have seen that and I would have said, yep, I'm getting out. And whether or not you get out up there or you get out down there, it didn't really matter. For me to make my risk to reward down these levels was fine. So when I start seeing these a lot of negative indicators, get out of the market about there and make my 1 to 2 risk to reward. So that was the Aussie USD, this one was the pound CAD, and the final trade was the New Zealand USD. So with the New Zealand USD again, first thing we look for what it's moving on the daily chart. Here was very unclear. We don't know if that's a large AO or not. So I don't bother determining if it's pulling back. What I do want to do first is drop in some resistance levels. So roughly where I think the market might come back and retest. And then if I'm going short, I'm looking for my divergence with my higher high in price on this 4-hour chart with the lower AO. So when this divergence occurred with a higher high in price and low AO, that's where I started looking for an entry to go south. But you don't want to go short straight away because it could step up higher one more time. So what you'll need to do is on your lower time frame, look for that resistance area, which is previously resistance as it tried to push through, which then becomes support. And as you can see, it just pushed straight through that support, pushed straight back up. I would have entered the market around these support areas. Some people would like to wait for that double top and then the push back lower and then get in. It's all your own trading plan, so follow that. Get in the market there, put my stops up there of around 100 pips. So I want to get out roughly where these daily support and resistance levels are. And that gave me 250 pips. This one gave me 220. So I easily made my 1 to 2 risk to reward. And as we start moving down, I'll just move that across from that point there. We're looking for divergence. Divergence is our key of the market possibly changing direction. And divergence works very well when it hits support and resistance areas. So as the market pushed down to these daily support and resistance areas, and I saw AO divergence stepping down with the AO stepping up, I say to myself, I'm getting out. I'm really strongly getting out. I was automatically taken out because I made my risk to reward. But if I wasn't and I was getting close, drop down to the 15-minute chart. Again, higher AO with the lower price. So as the price is stepping down, the AO stepping up, that's another indicator saying, hey, listen, you have 1 hour divergence, you have 15-minute divergence, you're hitting support and resistance areas, it's a very good idea you get out. And that's why you get out. You don't let emotion play and let me just try to make that extra 10 pips or 20 pips or whatever. Follow the rules. When you get to support and resistance areas with divergence, it's a key point the market will always want to turn. So you always look left for where you think the market could turn. And again, use your Fibonacci tool. You can drop that in, and in this case the Fibonacci move of pullback was around the 50% mark. So that's just another inkling. 2 divergences, 2 support levels hit, a Fibonacci area hit. I mean, there's not much bigger answer you can say to get out of the market. And if you want, drop down to the 15-minute chart, and we saw divergence drop down to the 5-minute chart. Sometimes I wouldn't leave it till this low, but again, lower low in price with a higher AO even on the 5-minute chart. And so you would have seen that and said, bang, I'm out. And you made some good risk to reward. So thank you for that. That was week 19 of the Forex market review. I really do hope you enjoyed the video, the trades that we got in and got out, and why we got in and why we got out. I wish you all the best in your success. Take care. Bye-bye.